Hello, everyone, and welcome back to another special edition of the Radio Chat. Today, we have a distinguished guest joining us from the real estate industry, and I couldn't be more excited to explore the unique perspective and insight that he'll be sharing with us. Jonathan is a co founder and director of Ecam Capital, a private debt investment platform invested in over $3 billion of property loans across over 265 plus projects. Jonathan brings over 15 years in the property lending industry, funding over $2 billion property finance transactions. Jonathan is also the director and founder of Capsule Finance, servicing developer clients seeking lending solutions in New South Wales, Victoria, Queensland, and South Australia. Jonathan, thank you so much for joining me today. And if we could start with a bit of your story and how did you get involved in your business?
Thanks for having me, Al. Bit of a background on me. I started off as a chartered accountant just before the GFC, and started with auditing banks and financial services businesses, and really got interested in becoming a banker, and spent a large amount of time working at the major banks, three of the big four, lending to corporates and property developers. The market was shifting after the GFC with a lot of regulatory requirements, which were making it very difficult to lend money to property developers and the sector. And that really spawned me to move into private lending. And very simply, we lend money as a non-bank lender to developers who potentially don't want to deal with the major banks because they need money quicker, they need flex on terms, or because the bank has really pulled back. The banks are just not prepared to lend for certain reasons. And so part of what I do in the Ecam Capital business is we pull investors together and pull loans together into a single vehicle. And by doing that, we get better advantages by having better access to deal flow, more diversification, and therefore better protection for our investors as they invest across over 265 loans.
Right. That's exciting. Yeah. So if we refer back to the theme of the radio board game, which is linked to this podcast, imagine you had a 12-year-old kid sitting next to you. How would you explain what you do in very simple terms? What would it be?
Yeah, look, very simply, I suppose, if we liken it to a home loan, for example, let's say you're a bank and somebody comes to you wanting to borrow money to buy a house. The bank would lend you, call it up to 80% of the value of the house, and they would get that money through financial markets, through people depositing money at banks, term deposits, and all that sort of thing. So what we do from a private non-bank lender perspective is effectively, instead of you contributing your money, putting it in a bank account at a bank or earning some interest on that, you invest directly into that loan, and you basically fund and allow somebody to purchase a home. But we don't do this from just a residential perspective. We do this from commercial real estate and a sector perspective, where we're looking at anything from a Coles supermarket to building an industrial warehouse, to funding a childcare center, for example, or even looking at things like affordable housing and other sectors all related to property.
Right, right. So, Jonathan, your journey in the property lending industry spans over 15 years with significant accomplishment under your belt. Could you share with our listeners some of the key milestones that shape your career path?
Yeah, for me, a big one was the skills I learned through my time at KPMG and at the Big Four banks, really gaining that mindset around risk and credit risk and financial analysis. So that really helped me with just a strong foundation in assessing private debt deals. And another key milestone probably was for me moving into a listed company, getting involved more on the funds management side of things. So understanding how to run an investment fund, all the things that you need to be licensed to be a strong custodian of investor funds. And yeah, that really shaped Ecom Capital today.
Right, right. That's awesome. So you've been instrumental in funding over $2 billion in property finance transactions. Can you walk us through a particularly challenging deal you've encountered and how you've navigated through it successfully?
Yeah, look, I have to say every deal in private debt lending has its own challenges because typically if it was a vanilla transaction, you would go to the major banks to fund that because that's their bread and butter. So ultimately, most deals have some challenges which you need to understand to be able to mitigate, and it's really that competitive tension between risk and return, and really diving deeper into project risk to understand what are the critical risks, and how you get comfortable with assumptions that are being presented that allow you to navigate these situations successfully. And so what I'd say is in private banking land versus a major Big Four bank, for example, in my experience, there's an even higher rigor of credit assessment because with a bank, you can provision for bad debt, whereas in a private bank, typically having a loss is just not acceptable. And so there's a much higher degree of credit assessment to understand and making sure that when you're dealing with these challenges, you're well protected and there's a strong ability to exit on your position there. Just as an example, we've looked at deals where for whatever reason, due to the current market situation, construction timeframes have blown out, and for say an apartment project, and they've hit the maturity date on their loan, and in addition to that, the incumbent financier just doesn't want to extend the facility, and so we've had to deep dive into the pre-sales on this apartment building, as so a lot of these pre-sale contracts have basically get out clauses and sunset dates in there that are close to expiry. So the ability for us to really dive deeper into the market, see that values since when these pre-sales have signed up have gone up significantly, and therefore the risk that you won't be able to extend these contracts is relatively low, and being able to flex on the terms to allow for on refinance a slightly lower level of pre-sales, and for them to hit milestones over time to get to the right risk position that's been something we've been able to achieve.
Right, that's awesome, man. Yeah. So being the co-founder and director of Ecam Capital, overseeing investments in property loans exceeding $3 billion across 265 plus projects, what drove you to establish Ecam Capital, and what distinguishes it from other private debt investment platforms?
Yeah, so a big thing for me, being in the investment field for a very long time, I had a number of family members always asking me for investment advice. What should I be doing with my money? Where should I be putting it? Are there any opportunities that you see? And what I realized was most of my clients at the time were institutional or ultra high net worth investors. And there was a large majority of people that they just weren't getting the access to the same types of opportunities that I was being exposed to and that my clients were being exposed to. And I always thought, well, why is that? And if they were getting access, they just weren't getting access to the same quality of deals or the same returns that were available to um, uh, people with significantly more capital. And so a big inspiration and reason for why we set up was to democratize the space and really provide access to uh, all Australians effectively, and doing it in a really well considered and measured way. So the way that our funds at Ecom Capital are structured, they're structured to give our investors the best success of getting a fair return on their investment and really protecting them. So the fund's multi-manager and also highly diversified, ensuring that their investors have the best chance of success. So you're not putting all your eggs in one basket effectively. And so that's been our mission to really act on behalf of all investors and get them the best returns and protect their money.
Okay. Sounds really awesome. In such a dynamic industry, staying ahead of the curve is crucial. How do you and your team at Ecam Capital identify and capitalize on emerging trends and opportunities in the property lending market?
A big thing about the property market is that there is a high degree of information asymmetry. It's not like listed markets where you've got a lot of data that's readily available and instantly available to the market. And so your ability to access on the ground information is pretty critical. And we do that by heavily leveraging on industry experts, constantly speaking to those on the ground to understand different markets, different subsectors, and that's really how we stay relevant and on top of emerging trends and opportunities. The other way is because we're partnering with GPs, we're a lot of the times less so about staying ahead of the curve and more so about by being the curve. So we're partnering with the best in class, and a lot of the time they're getting this access to and leveraging their industry experts to get the best risk-adjusted value for their investors and naturally us as well. And so by being the curve, we're effectively moving with the market and exploiting opportunities within the market. The other thing that we're looking at now is utilizing the data that we have to do some deep analysis using AI and really synthesizing that data to make better investment decisions. And I think that's going to be a key one going forward.
Okay, wow, that's exciting. especially using AI to really digest lots of data here. It's retraining. Fantastic. Um, Having witnessed shifts in the real estate landscape over your career, where do you see the future of property lending headed, particularly with technological advances and market disruptions?
Yeah, so as I've said, look, I think this market is here to stay. If you look at the US and Europe, um, and you look at the share of the market share of lending, private debt and banks are almost 50-50 in those markets. Whereas if you look at Australia, we're still very immature, and private lending only makes up a small portion of the lending market in Australia. So I think that that's going to continue to be more prevalent. If I was reading a note from Jamie Dimon actually a couple of days ago, and he's saying there's still a massive incapacitation of banks globally due to Basel requirements, and it's making it very hard for the banks to lend money to the space, which means inherently there's going to be an increase in market share to private lending. What we're also seeing is the rise of pseudo banks. So a lot of private lenders are now having stakes acquired or having warehouse facilities provided to them by massively large institutions like Ares, Apollo, KKR, Blackstone, and they're just seeing that there's a scarcity premium in Australia for private debt compared to the rest of the world, and so they're sort of piling money into the space. So we're seeing from that side of things a lot of money coming into the sector, and naturally. There's going to be innovation in the space, the use of AI to make better investment decisions in the space, and potentially to automate a lot of smaller vanilla loans, making it more cost effective to lend in the space, and potentially increasing competition. So yeah, we're pretty excited about the space, and I think there's a lot of developments that are happening there.
Okay. So building successful partnerships is key in any business endeavor. Can you share some insights into how you cultivate and maintain strong relationships with clients and stakeholders in the development finance and investment management sector?
Look, we tend to communicate often and transparently with our investors. And we're finding that not only keeps us front of mind, but builds a lot of trust with our stakeholders. Our ethos is to continually value add, and how we do that is a number of different fronts. With our investors, we consistently hold education sessions, market updates, helping people understand and make better decisions. And as well from the GP side, with our underlying lenders, we're trying to build a community to ensure that there is some information sharing. We don't share any sensitive information, but we love to have a robust discussions with them to ensure that there's better decision making all around, and highlighting some of the things that we're seeing in market. So yeah, look, that's probably the biggest ways that we are trying to maintain relationships with all these stakeholders that we have.
Beautiful. Managing risk is an inherent aspect of property lending. What strategies do you employ at Ecam Capital to mitigate risk associated with property loans, particularly in volatile markets conditions right
Yeah. So we have a number of processes in place and policies in place. We act within a very strict framework to ensure that we are not taking on excessive risk, especially in a volatile market. We tend to have strategy meetings with our advisory committee very frequently, if not once a month, to ensure that we're on top of the trends, what's happening on the ground in market, and really leveraging our consultants and trusted advisors to make sure we've got a deep understanding of market movements. We actually got a actuarial to build a data analytics model for us, and all the data from all our GPs feeds into that to give us some deep insight around what everyone else in the industry is doing, and therefore how our portfolio is positioned. And the other way that we're looking at potential volatility is just seeking out managers who are really active in terms of their management of portfolio exposures, and running. Another key one for us is that a lot of the financiers that we deal with also have ties with complementary businesses. And what I mean by that is they may have a share in a building business, for example, and therefore, if there's any issues with property loans, they've got the ability and the know-how to work out some of these situations. And so that's a real way we're really protecting investors. And the key ethos of the fund is obviously diversification. So having a pool large enough where if they're all individually, actively, and well managed, the probability of default across the portfolio is fairly low.
Okay. So given your deep involvement in finance and property, how do you anticipate the relationship between these sectors evolving in the future?
Yeah, look, I think capital is a necessary component to ensuring the strength and sustainability of the property industry. So without liquidity, everything grinds to a halt, right? So I think it's a really important relationship to support, for example, building more homes, which we're in very short supply of at the moment, given immigration. And so without having the finance and the capital backing, it's very hard to see sustainable growth and success in the property market. So it's a critical component, and I think that's evolving with technology, and as I mentioned before, with blockchain, AI-powered analytics. I think there's going to be some interesting opportunities there for finance to be able to more quickly adapt to volatility and market movements, and really increase the ability to scale and make investment decisions. So yeah, that's I think there's some interesting things happening in the sector.
Yeah, it's exciting for the future.
Yeah.
So in an increasing competitive landscape, innovation is crucial for sustained success. Could you highlight any innovative approaches you just mentioned?
Yeah, like as I mentioned before, we have a big data model that's been built by an actuarial, which we can pull levers, we can highlight areas of risk. We can look by location to understand geolocation risk, and what we can drill down to, in Melton South, for example, how many land subdivisions do we have we invested in that region, and really getting a deeper dive on data to make better investment decisions, so we can see what's been defaulting, why, analyze and builders, which builders have gone in default, how that affects the portfolio, what concentration risk we have around that. And so, yeah, big innovation for us is how we build AI into that, to have some learnings out of that and to better use that data. So we're just experimenting with that now and how we have more timely and better data.
And at the same time, you're trying to streamline your process and your investment outcomes.
That's right. That's right. And make it easier to sift through the information to make better decisions.
So sustainable development and social impact are gaining importance in investment. How does Ecam Capital incorporate environmental, social, and governance (ESG) considerations into its investment decision?
Yeah, look, investors around the world are increasingly ESG focused. We tend to lean into managers with an ESG focus, and most of the managers we deal with, if not all of them, do assess their deals from an ESG perspective. And it's quite critical to understand, for example, if there's contamination, environmental protection on different development sites, for example. It's impossible to lend to developers or people that are now sort of classified as politically exposed or dealing with the process of crime. So Australia is very good in that sense, with the degree of due diligence on these requirements. But it's the more awareness and the more conversations we have around it, I think it's creating better ESG practices, and we're seeing some of our underlying lenders really focusing on things like NDIS and SDA housing as well, and really backing good social outcomes for Australia.
That's beautiful. If you can go back to teach your younger self or teach your kids, what will you teach them?
It's an interesting question, Al. It's a good one. A couple of things that I found really useful is the ability to communicate effectively, and to really sell and negotiate. I think that's a really key human skill, especially in the age of now AI and computing. I think there's a lot of roles out there that are going to be, I think, chewed up by AI and displaced. And so one thing, dealing with people and as a community, I think is really important is that ability to interact with other people and communicate effectively with other people. And so I think those are the two sort of disciplines that over the next 10 years are going to be really important. The other one I'd probably teach them is having discipline and resilience. I think that's especially in this day and age with it being ultra competitive, being able to stay disciplined and resilient to change, to rejection, I think is really critical of importance if to succeed in the world today.
Which is a way of life, by the way. You got to be able to deal with kind of rejection over time and
100%,
objection and so on.
I was listening to something the other day another podcast, and they were saying negotiation starts when somebody says no.
Sure.
So
if everything was just a yes, then you're not learning anything.
That's right. Cool. Right. And also one of the big things for us as finance people is the power of compounding. the eighth wonder of the world. So I teach my kids that early. So if not just from a monetary perspective or a finance perspective, but from a self-development perspective, just 1% improvement every day
Yep.
in everything that you do, that can compound quite heavily over time.
Interesting. But last but not least, any final words of wisdom you would like to leave with us today, Jonathan?
Yeah, it's a good one. Probably say, yeah, do the right thing, do the best you can, and just show people you care and deliver as much value as possible.
Okay. Now, are there any questions that I could or should have asked but didn't ask you on the final takeaway of today's chat?
No, it's all that's good interview.
Okay. Now, how can people get in touch with you for your specific investment and lending services?
Yep. If you want to get in touch with us, go to www.ecamcapital.com.au. So EKAM capital.com.au.
Okay. Beautiful. All right, Jonathan, thanks again for joining us on this interview on the Radio Chat podcast today, and we'd appreciate your presence.
Thanks, Al. Thanks for having me.